Welcome to this week's Earnings All Stars. We've had a lot of the Mag 7 reporting, but we're still waiting on NVIDIA, but they're not reporting this week. So who is? Well, there's a lot of top names, especially in retail. You know how it works. At the end of earnings season, we get these big retail stocks. And this is important this earnings season because we're all worried about the consumer now. Are they still spending? That's going to be a big issue. It's been hit or miss, depending on which retailer you talk to, or restaurant chain, or those in the travel industry, right? But this week, we're going to get some answers. So which stocks should you be watching? I have 5 of those that are top this week. So let's dive right in. The first one out the gate is not a retailer, actually. It is Cisco Systems, ticker CSCO. You know it. And look at this earnings surprise track record. It's one of the best. It hasn't missed in 5 years. That is very impressive considering back here in 2020 was the pandemic hitting. And so a lot of companies that had great track records missed in this region. And then a few more started missing here in 2022 as things got a little difficult as well with the Fed tightening, but not Cisco. It's got this perfect track record. So do I think they're going to beat again? Yeah, I do. But the beat isn't the whole story, as we know, because look at these shares. Just over the last year, they're up, but only 2.9% in the last year. And year to date, they're actually down 3.9%. The stock is cheap, but Cisco's been cheap for a while, trading with a PE of 13. It does pay a very nice, juicy dividend now, yielding 3.3%. So this is going to be an interesting one to watch on the tech side. It's kind of a forgotten name still here, but maybe it shouldn't be, especially for value investors. And let's switch over now to the retail side. So we're seeing a lot of the big retailers, as I mentioned. One of the big kahunas is going to be Walmart. And you can see these shares busting out now to new 5-year highs. Over the last year, they're up 19.2%. off of those October 2023 lows. And can another beat here propel these shares even higher? It's got this good earnings surprise track record, just 3 misses in the last 5 years. Again, that includes the pandemic, but it didn't even miss kind of at the start of the pandemic. As you can see, it had 3 beats in a row as everybody was racing out to buy groceries and everything else we needed at stores like Walmart. So things are still looking hot here at Walmart, but the PE is also hot too. And this has been an expensive stock for quite some time, especially now on this breakout. Forward PE is now 25.7 for this type of retailer with small margins. I'm not sure who's paying up for that, but someone is. Dividend is yielding only 1.4% now. So this is one we're all going to be watching this week. Then I want to switch it over to agriculture because John Deere and Company is one of the top agriculture stocks. Now, this is on the equipment side, and you can see here it's had super hot recovery out of the pandemic with huge beats there. And then it's mostly been moving sideways for the past several years now. No incentive to bust out. And with interest rates higher, it now costs the farmers more, at least in the United States, to get financing on, a new equipment. So that's kind of stalling things here as well. But this company kind of moves in cycles, a lot of buying of equipment during the pandemic, and then now they're not. So what will happen here this quarter? It too has a good earnings surprise track record, just 1 miss since the pandemic started. So I do think they're probably going to beat again. But 1 year, the shares are up 9.1%, and year to date up just 4%, but moving in this narrow trading range. Now the PE is back down again. It was an expensive stock several years ago, but now the PE is at 14.9 with a dividend yielding 1.4%. So this is looking more like a value, but that is what you would see kind of at the bottom of the cycle, the nobody buying cycle for the ag side. But is that about to change? Will these shares start to move higher here shortly? We don't know. We've been waiting. So we're going to see this quarter. Now we're going to switch back to retail, but Chinese retail with JD.com, one of their huge online retailers. We've seen this story before. It's got a great earnings surprise track record. It hasn't missed in 5 years. That is also impressive given what was going on in China during the pandemic on their retail side. But, online ordering was the place to be until now it's not. And even in China, we can see these shares reversing course there after highs in 2021 and now tracing it all the way back below the pandemic, pre-pandemic levels. So is it cheap? Yes, it is. JD.com with a PE of just 10.3. It does pay a dividend, and that's now yielding 2.3%. Now, year to date, these shares are actually up off the lows earlier this year, up 18.9% now year to date, but over the last year, still down 8.8%. And, over the last 2 to 3 years, down significantly. But is this a buying opportunity? Have these shares bottomed? We will see this quarter. Then we're going to wrap it up with another retailer. This is on the luxury apparel and accessories side. Canada Goose, remember them? Ticker GOOS. They had one of the hottest brands on the market, especially for winter coats several years ago, but that hotness has now receded. And now we're having the consumer possibly pulling back on what they're buying, especially on the luxury side. So this company did miss last quarter, but otherwise has a pretty good earnings surprise track record, especially for a retailer with just 4 misses in the last 5 years. So that's pretty good. So we'll see if they can turn it around, if it rebounds here this quarter after the miss last quarter. They don't pay a dividend, but it is a cheap stock. Now with this big sell-off over the last year, it's down 43.9%. Year to date, still down 4.1%. So we may or may not have seen the low yet in Canada Goose because we're still waiting to see what the consumer is doing. We haven't even gotten a full-fledged throw in the towel yet by the consumer. So that could push these shares even lower, especially if earnings are cut again. So the PE is at 14. Could we see single-digit PE on Canada Goose? That's always possible on the retail side when there's recessions and the consumer pulls back. So these stocks a little bit iffy here on the retail side, other than Walmart, which the market is believing can do no wrong. And we're seeing the exact opposite of Canada Goose chart with Walmart breaking out to 5-year highs. But something's got to give on the retail side. And we're going to see this week with some of these big retailers. Now, Home Depot's also reporting, and Alibaba on the China side. So those are a couple other big names you should be watching this earnings season and this week in particular. And we're going to get more retailers next week. A lot of the niche retailers. Can any of them buck the trend? I think some are gonna, but we will find out. So be sure to subscribe to get all of our Earnings All-Stars charts and see all the videos on YouTube. You can get it at Zacks.com/YouTube, or go to YouTube and just put in Zacks Investment Research to get all of our videos over there, including our top stock picks of the week. That is always a vital one too. Get those top stock picks every week here at Zacks.com. But be sure to get us somewhere, and I'll see you again next week with some more earnings charts.